Hey guys, it's Carter. Welcome back to the channel. Hope you guys are all having a great and amazing day today. Now in today's video, we are diving in and we are looking at ticker symbol SCHD, the Charles Schwab Dividend ETF. A lot of people have been freaking out saying that this thing will never recover because it's down about 10% in the past year alone, comparing to like the S&P 500, which is up about 6%. A lot of people are worried and nervous about this, so we're going to be breaking this down in today's video. So I hope you guys will enjoy this. If you guys do, hit that like button, subscribe. If you guys want to learn more about swing trading, I just released a brand new swing trading course talking about how I find stocks, my psychology, my strategy when it comes to swing trading, and you guys can use code YouTube to get 20% off. So I'll put that down below for you guys, but let's dive into this. I hope you guys enjoy it. Now, ticker symbol SCHD is also known as the Charles Schwab Dividend ETF. Now, one of the reasons why a lot of people love this is because it has amazing holdings. You'll have companies like Coca-Cola, Verizon, Broadcom, Cisco, and a variety of other very strong, stable companies that mostly have a little bit of growth, but overall, they get a lot more dividends. Now, the reason why a lot of people have been nervous this past year is because in the past year, it's underperformed the S&P 500. Now, the past year alone, it's down about almost 10%, 9.8%. Now, comparing to the S&P, which is up about 6%, meaning if you would have invested into the S&P, you're up on your money. If you would have invested into SCHD, you're down on your money, and about 10%. Now, a lot of people are worried about this ETF and asking, will it ever recover? Now, the thing about this one is this is a dividend ETF. It's not a growth ETF, or it's not an index ETF. This ETF seeks out these high quality dividend stocks. So meaning if you invest into SCHD, you want more cash flow, you want more passive income rather than growth. Now, the reason why I say that is because it's a dividend ETF. The dividend yield is 3.92%. Just to put that in perspective, comparing to the S&P is 1.5%. The dividend ETF pays double the dividend of the S&P 500. Now, if you would have invested $10,000 into ticker symbol SCHD, your annual dividend would be about $392 comparing to the S&P, which is only about $155. Now, yes, right now I understand that this ETF is underperforming the S&P, but you have to realize this isn't a growth ETF, so you're not going to have companies like Google, Tesla, Apple, all those companies that we love to see growth out of, you're not gonna see in SCHD just because it's a dividend ETF. As well as it's not an index, so it's not a market staple that a lot of people look for long-term investing. This one here is just a 100% cash flow passive income ETF. Now, answering that main question of will it ever recover, well, looking back at previous history says it will, but you just have to understand that it's just because of the holdings. Now, the holdings in here are more value picks rather than growth picks. So you're gonna have less growth, but you're also gonna have more dividends. So answering that question of will it ever recover, personally, I definitely think it will, but it could take some time, but expect better dividends than other ETFs. Now, answering that question of am I buying it? Well, I love this one. I've been investing into it for a while, keeping it under about 2% of my portfolio. I believe that this one here is a great pick to pretty much diversify your portfolio. On top of during recessions, this one here doesn't fall as much just because there's more value picks and you get more cash flow. So I think it's smart to have this in your portfolio just to kind of stabilize it, make it a little less volatile for long-term investing, and you get some great cash flow, so you can't beat that. But overall, yes, this one here is gonna lack growth, but get better dividends. So guys, I hope you guys enjoy it. If you guys did, hit that like button, subscribe, and we'll see you guys tomorrow in the next one. Take care.